Morning, everybody. This is Gil. I'm running solo, or actually, I should say flying solo today because Dr. K is in Turkey. And apparently, I guess they only run 2400 baud internet in Turkey, and he can't get a connection that's fast enough to run GoToWebinar. So hopefully you guys don't mind me going solo, and you'll bear with me. But for the most part, after the introduction, I'm usually running the show anyway, so not really a big deal. Uh, Here's what I'm seeing in the markets. So everybody hear me okay? Just want to make sure I got a new mic plugged in here. Good, okay, that's good, as long as I get a few yeses. Very good. This is what I think is interesting about the market is that you're seeing it is fairly erratic. You know, you're seeing a lot of stuff flying around, a lot of gap ups on earnings. Some of them don't go anywhere. Some of them come in pretty quickly. I noticed, like Lumber Liquidators coming in this morning. I'm not sure what Facebook has been coming in, but if you look at the NASDAQ Composite, we're going to pop this up a little bit. You've got some distribution here. Here's a distribution day here. That's 8 days ago, I believe, and another, what I would call a churning day or a stalling day here. Volume picks up, and you close at the lower end of the range here. Then you bounce back up. You get hit here on heavier volume, and you're down on the day. And the next day, yesterday, you do close up. My bar is red because it's just color coded because you opened at the peak and closed near the lows, and volume was up pretty good yesterday. You also had today. You've got the same thing going on. It looks like you're stalling in here on the Nasdaq, and volume is up. Now I know the Nasdaq was up this day and this day, but to me this is stalling. When you've got that thing coming in that much of a range, or that much down on the bottom of the range after opening near the peak, and you've got Apple jacking to the upside on a huge gap up, you have to ask yourself, why can't the Nasdaq get a little bit more going here, given that it's got some help from one of its biggest components? And it really wasn't. So, some of the selling that we saw last week, which was concentrated mostly in the big cap Nasdaq stocks, seems to have spread into some of the other names, and we've seen some names getting hit. But in the midst of all that, you have earnings roulette season, as I like to call it, causing some gap ups and some crazy action. But the Nasdaq bothers me a little bit because you're seeing a lot of this distribution along the peak. The other thing to consider is this: is that remember, I think back here, this was the 11th when Bernanke, I guess he had a speech this day on the 10th after hours. I think it was a Wednesday, and he did a Q&A after his speech and babbled about quantitative easing going on forever. And as I was joking, he sounded a lot like Dr. K, talking about QE forever, and that's what's happening. And yet the market, you had a huge gap up the next day in the market. Now we again had testimony to Congress, I think in here last week, and the same thing came out, that QE is going to continue, and he's emphasizing this. Some people joking in the chat room that if the S&P is down a couple of bucks, Ben Bernanke has to get in there and jawbone quantitative easing, or the continuance of quantitative easing. But what I notice is the same kind of news is having less of an effect here on the Nasdaq. And the other thing to consider here is when we had a big gap up the last time, you went up for 12 straight days. This time you're running into a little bit more resistance, and so the market to me feels a little bit more, say, stretched and a little tired here. And so I think, aside from some of the action in some of these names where they're gapping up on earnings, I'm somewhat cautionary and wouldn't be surprised to see a further pullback in here. I don't know if that drives the market direction model back to a sell signal. I'm not quite sure what would drive it back to a sell signal. You'd have to ask Dr. K, but for the most part, it's a little bit problematic here, and you're seeing some distribution. Now, if we look at the, I don't know what happened here. Let's see. If you're looking at the S&P, you've run up straight off the lows, and you're starting to come in. You've got 1-2 days of distribution right off the peak. Right now we're trading about 4.5% below yesterday's volume rate at this time, but it wouldn't surprise me to see that pick up, and you might see it start to come in. So this sort of a very V-shaped formation. I can make it a little less V-shaped, but it's still, you can see you've got straight down, straight up, and it could be some sort of a bull trap where you have a double top. That's what I'm seeing. And so my tact here is to take profits into rallies mostly, and hang out and see how things react on earnings. So, I'm a little bit cautionary here. I'm not as bullish as I might be if things were acting a little more normal. You also have some bizarre action, I think, in some of the indexes, or not the indexes, but individual stocks. This morning, I saw Biogen gapped up on earnings. Came out with earnings this morning. They beat, I think, by 35 cents, which is a pretty good beat. And the stock was gapping up to about 235, 234, somewhere in there. And the high peaked out at 233.97. I guess that's about where it opened up. And then you came in real fast, and it was down to a low of 222.20. And I was thinking maybe Stevie Cohen is blowing out his Biogen position here. But in any case, you see the thing just swinging around, and there's no real resolution following earnings. No breakout, no big move to the upside that's sustaining. You're just seeing this big, huge range, and the thing's chopping around. So I think that looks a little bizarre to me. You look at Facebook. Facebook, huge gap up. I mean, that's quite an amazing gap up, I think. Stock has been coming in straight in all day long, all morning long, rather, and it's trying to hold the intraday low, which is 32.75. You're only about 25 cents above that right now. So it's a little bit problematic, I think. Lumber liquidators, and as Dr. K said, that is not a viable gap up because Facebook is still, if you look at it, let's go to a weekly chart real quick. Whoops. It's still in this big ugly base, so it's not really, stock hasn't really doubled, I guess, since coming public or done anything spectacular. I don't know if this is viable or not. Maybe it is, maybe it isn't. But you can belabor that point all you want as far as it having to double first. That's a rule that I wasn't really aware of, but I guess that's something that figures into the stock's status as a leader. And so, maybe that you could buy this, get a 32.75 stop on it, and maybe it does work. So, that's a possibility. But I'm not sure I'd necessarily buy into this move. You're also seeing LinkedIn is moving up in sympathy to Facebook. You had D.R. Horton came out with earnings today. I thought it looked like they beat earnings, and yet the stock is breaking down pretty hard, breaking away from the 200-day moving average. So, but the housing group, I've been suspicious of it for a while, and the housing group is, I think the action in the housing group is showing you that there is some slowdown in housing, and this huge recovery in housing is really not what it's all cracked up to be, even though the media seems to focus on it. But you're seeing these gap downs. Is it a shortable gap down? I'm not so sure. Here you have a big head and shoulders. So here you are down to the neckline, and this could be a major top for the stock here. It's holding at the neckline right now, but I think you could have gotten a short off somewhere above $20. And it's coming down now to the neckline, so maybe it busts through. But that's looking pretty ugly. If you look at Ryland, same situation here. This is a different kind of a head and shoulders, whereas DHI is leaning to the right. This one is pretty straight across for the most part. The peak of the left shoulder is just above the peak of the right shoulder, so that's still what you want to see in terms of the setup. And now you're heading for the neckline. So my guess is that these stocks are topping, and you're going to see them come down a lot more. What they do, between now and then, over the next few days, you might see a bounce. I think if you saw a bounce and say Ryland up to the 200-day, that could become shortable. If you saw a bounce, say back up to fill the gap, or even to the low of the gap here in DHI and DR Horton, that could be shortable. Some of the other stocks in the group. Lennar also breaking down, similar sort of formation. You got left shoulder ahead and a right shoulder, and this is leaning to the right. So this whole group is breaking down, and I think on this basis, the group is a short, and you're looking for rallies to short into. Now, if the housing stocks are starting to break down, what does that mean for the broader market? Well, I think you're going to have to look around and see how other groups start to act, but we have seen some of the retail restaurant groups breaking down. I saw Panera getting plastered yesterday. Buffalo Wild Wings also breaking down off of its peak. In the technology area, you saw iRobot, got whacked after earnings. So again, bet on your number for earnings roulette and see what happens. And if you get lucky, maybe you end up with a Facebook, or maybe you end up with an iRobot. So I think it's a little bit of a mixed bag, and it's not as clear as I might like it to be. And so I'm basically playing light here and not making any heavy commitments and waiting to see how things pan out. But I'm definitely alert to the short side here, just to let you guys know that's what I'm thinking. I don't know what Dr. K's thinking right now. I do know that he's enjoying the Mediterranean over there in Turkey. But we'll see what happens here. So I want to go through some stocks. Silica Holdings, pocket pivot here off of the 10-day moving average, and it's still holding the 10-day. Stock comes out with earnings, I think, in the next few days, so we'll see what happens then. But this looks okay, and it's acting okay. And I think if there is going to be some rotation, maybe you'll see it come into some of these oil names or into a name like Silica Holdings. But I think it looks okay for now, and if you want to hold a, say, 10% position into earnings, I think that's doable. I don't think you have a lot of risk there, and you would have a head start if there was some sort of a gap-up move that you could buy into. I'm going to go through some of these other names. Illumina, now that's a better viable gap up. Stock held above the low, well above the low. It's not coming in like Lumber Liquidators, which is now violating, and it's not quite. Let's see here. The low here is 91.53, and you're trading 90.76. So you're really not even 1% below that low. Now I guess Lumber Liquidators could be seen as a more volatile stock, therefore you would give it 2 to 3% of so-called porosity through the low of this gap-up day. But with the housing stocks weak, and I've talked about this before, I'm suspicious of a name like Lumber Liquidators. I'm suspicious of some of these materials names like Eagle Materials, was trying to come around, and now it's failing along with the housing group. And so I think you need to be cautious when you're dealing with that and think about the group that you're buying into when you're buying one of these viable gap-ups. So with the weakness in housing, I'm not so sure I like Lumber Liquidators, and I should have probably shorted it yesterday at the peak, which crossed my mind, I have to admit, because of the fact that looking at all of these housing stocks, they're all forming head and shoulders tops. They're all together now. So I remember the last time I saw that was in 2006, 2007, and all the housing stocks, which had been hot up until then, all at the same time, along with a number of financials, started to form head and shoulders tops, and that was the first sign that the market was getting into trouble. And if you think about it, a lot of this QE rally has created this sort of phony move in the housing industry, and maybe the end of that is telling you that the economy really has no traction. Despite the hot air coming out of Washington. I know Obama had a speech yesterday on the economy, but nothing really concrete in terms of economic policy that's going to do anything for the economy. There's a lot of talk. I heard some comment about decreasing the amount of time it requires for someone to get a college degree. So essentially, I guess that means dumbing down college education as if it hasn't been dumbed down enough. And I don't see how that's the solution. He needs to be talking about tax reform. And I think cutting the spending, government spending, is another thing that needs to be discussed. But mostly tax reform, I think, would help, and perhaps even tax amnesty for money that is being held overseas. Apple, I think, announced yesterday they got about over $100 billion of about 150 billion, I think, something like that, is overseas. So 2/3 of the cash on hand they have is overseas. So, I think there are some solutions, but I don't think that this administration and this Congress is really up to implementing those sorts of policies. They're stuck in the mud here, and a lot of bromides about these sort of Band-Aid fixes about college education and blah, blah, blah. But anyways, I'm going to let's go through some more names here. I did mention LinkedIn. Someone's asking about that. And it's stalling up at the top. I think, I actually shorted the stock this morning. They ran it up to 205, 206 near this peak here on this day. And my thinking is that, yeah, the stock is rallying because of Facebook, but somebody's nervous, bought the stock lower, and they're nervous going into earnings, which I think is next week or the week after. they might want to bag a profit and sell into the rally. So, got near the peak here, looks shortable. It's a little bit of a scalp, and it still acts okay. It's not acting badly, but again, you're playing earnings roulette going into earnings, and do you think Netflix or LinkedIn is going to gap up again after it gapped up after earnings here, gap down after earnings here? Trading at 135 times forward estimates. What do you need to see to get this thing jacked to the upside? And are they really knocking the cover off the ball and generating huge revenues and huge earnings growth? I don't know. I guess we'll see. But the question is, do you really want to play it? I don't think you have to. I think you just wait and see what happens. Somebody pointing out that Biogen traded up at 245 in pre-market. I didn't see that this morning. But it did open up at 233.53, so it got way up there near the peak here. But the interesting thing I thought about Biogen, and something that bothered me, is you've had 4 pocket pivots in the pattern here, I believe. There's 1, 2, 3 here, and then let's see. No, maybe I'm wrong. Maybe no, yeah, 3 and then 4. This one's color-coded red because it opened at the peak and then came in and closed lower. But there's 4 pocket pivots, but yet the thing can't get going anywhere. And today the earnings come out and it's really not going anywhere. It's kind of stalling around. So you got to wonder whether this turns into an improper cup with handle pattern, and then the thing breaks down through the 50-day moving average and becomes a short. That's a possibility. So, I'm a little bit skeptical there, and I don't think the action is all that great. Under Armour is a gap up move. I guess you could say it's a viable gap up. That's the pattern right there. I'm not so sure right now. I'm not since I'm basically minding the store right now. I'm not putting out a bunch of alerts on viable gap ups because I'm a little bit skeptical of this environment. But of course, if you wanted to buy this one, the low is 65.35. It's a little bit extended now, about 5%. So it's maybe in range, but I think there's more risk with UA. But that's that's a viable gap up. Cabot Oil and Gas, another name. There's a gap up move. I guess they came out with earnings up 800%, and stock gapped up. It's stalling out a little bit. I've never really seen, well, I guess just had a viable gap up here, and it ran for a little bit. So I don't know, maybe this works. You're within range, so it's not running away from you. But on the other hand, it's an oil stock, so I don't know if it gets another move like this going. But that would be considered viable gap up type of move. And I don't think you really have to get into a lot of mulling it over. If you think that the story is good enough and you want to take a shot at it, the parameters of the trade. It's pretty simple. And we try to cull out the ones that we think are the better ones, but we're not that prescient in terms of knowing exactly whether something's going to work out or not. I can see go back and look at a lot of viable gap ups that I've passed on, and they have worked. And they may not be perfect, or they don't look perfect, or I don't like the company or something, but they do pan out. Now Yandex, I guess they came out. I don't think they've come out with earnings yet. Let me check. Yeah, they came out with earnings 47%, moving up and reversing. So this is kind of unclear. The stock's already way up there. If you're uncomfortable owning the stock based on the action today, then you could always take profits, I guess. It's a Russian internet company, as we know. We've talked about this one before. I would have been more comfortable maybe buying it, down around in here or down in here and being up on the stock. But it is kind of volatile, and it's not one that I really favored. I don't trust Russian stocks or Russian accounting practices, which I'm not really familiar with. Somebody asked, is Silica Story sexy? Sometimes in this market, stocks don't necessarily have to be sexy, but it is a provider of fracking sand for fracking drillers, and that's really the story behind the stock. I think that you're going to see fracking continue to increase over time, and they'll benefit longer term. The stock has been forming a pretty decent base. If you look at it here on a weekly chart, you can see you've got big support off the lows here. You come along here, you have another supporting week here where volume picks up. And then you have heavy volume here where it closes in the top of the range, so that's supporting. And then notice these next 3 days as you're coming down, boom, 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 you're actually closing in the upper half of the range, and you're seeing volume pick up. So as it's coming down, it's closing higher in the range each time, and then closes near the top of the range, and the volume is picking up. So that looks like supporting action here. You have a pickup in volume now as it gets back above the 50-day moving average. So, you know, that looks, the base looks fine. I think the critical aspect here is whether they surprise on earnings or come in with a number that's good enough to drive the stock higher. I don't know if that's sexy. You know, I guess if they were a condom maker or something, that would be sexy. I don't know, define sexy. Is Tesla sexy? I guess Tesla is a sexy stock. Away, this stock, I guess they come out with earnings pretty soon, and that'll dictate what happens here. But stock is trying to punch out of here. You know, maybe it's on its, and let's see, 1, 2, 3, 4, 5. No, and it would need to exceed, I think, let's see, 1, 2, 3, 4, 5, 1, 2, 3. It probably have to would exceed this volume here, which is 1,312,000. So you might get there. It's only 9:21 a.m. my time on the West Coast, and we still got more than half of the day left. So it could turn out to be a pocket pivot. It's a very erratic stock, though, and difficult to handle because it is erratic. Somebody talking about the 12-point swing 2 days ago. I'm assuming that's Biogen. Yeah, I know that, and that's actually what helped to create the pocket pivot. There was a talk about one of the drugs causing a death. You know, I think when a drug causes one death, that's not really a big deal. You know, if it caused 100 deaths, maybe that would be an issue. But in that case, it did turn out to be a viable pullback, and it created a pocket pivot day. That was 4 days ago. And it's still, but you know, still the action in this thing is erratic. Right now you're trading back down. You're 228. We got it right here, 228.81, and it's not really making big progress here. Somebody asked, you're short of LinkedIn. What percentage profit will you be happy with? 4%, 3-4%. So, but you know, if you go in real heavy and short to 200% position, you get 3% of it. That's 6%. So. Centaurus had a spin out this morning. I didn't see any news on it, but that's basically a big spin out, and I'm not sure what's going on there, but it did find support at the 50-day moving average and is holding up. So it looks like it's hanging in there for now, but we'll see what happens once earnings come out. I believe they're coming out towards the end of the month on, let's see, give me a second here while I pull that up. Looks like first week of August, so I'm just going to have to wait that one out. But there was some reason, I guess it's spun out, but I haven't seen anything. Let me check another source here, see what's going on. No, there's nothing, no news that I can see. If anybody knows of any news on Centaurus, let me know. InventSense had this weird pocket pivot. It's hanging in there. I think that this one is going to have to wait till earnings come in, and maybe it moves on earnings. And I'm actually toying with the idea of having a 10, maybe a 20% position going into earnings, because I think they might surprise on the upside. So, but it's a squirrely stock, you know, and I think you have to buy this thing when it comes in, rather than buying it when it's acting strongly. And you'll notice here it comes down to this support level at 15, and it pops back up, and now it's just hanging out along the 10-day moving average, and my guess is it's probably not going to go anywhere until you see earnings come out. And I think that's in the next few days. Let's take a look at that one. They'll be announcing earnings on July 30th, which is Tuesday. So, you know, there you go. Trip, that's a viable gap up, stalling a little bit. You know, the thing with this stock, it's had a big move already. I like to see viable gap ups occurring coming out of first stage bases. I think that's where we get the most juice. And we can look back at Tesla, where it had this viable gap up, and this is where it's coming out. You got a little shallow uptrend here, and then it gaps up, and then that engenders just a huge, huge move. And I think that's the sort of thing that you want to be looking for in a viable gap up. These things that are having viable gap ups well after they're up for a while, you know, they might be a little bit slower. You know, they can work, but they can be a lot slower than your average gap up coming out of a first stage base. I think that the earlier they are within the move, the better. And as you get up there, you know, that there's less upside juice. But the same thing goes with this one as far as being a viable gap. But the low is 68.71, so you're trading at 70.13. You're about $1.40 away from the intraday low. So if you want to buy it, I guess you can, and hopefully you don't end up with a lumber liquidators. You end up with something more like an Illumina that holds up and acts pretty well. So. Does Tesla need to build a new base? Well, there's a couple of things here. First of all, last week it hit the 10-week moving average for the first time since the gap up move here, which was a breakout from this base. So since it broke out of this base to the 40 level, it has never come back to the 10-week moving average. So now you have this situation where the stock finally does pull back for the first time, and the stock immediately bounces off and is holding up. Now you're hanging along the 10-day moving average. There's not a lot of volume in here. In fact, I think we're running pretty low volume rate today. 60% below average for this time of the day right now, and the stock's just hanging out. I think it's probably going to hang out until earnings come out, which is going to be next. When are earnings coming out? Are they coming out today? No, it's saying 7/25. No, August 7th. So that's a while from now. So I think it may just continue to go sideways. But I don't necessarily know that it has to build another base because it bounced off the 10-week line. And that's the first time it's done it in this entire move on the weekly chart. So it's a little bit interesting there. And I guess if you were alert to that, you could have bought it. It's seeming a little bit risky based on this high volume breakdown off the peak. But it did bounce back, and Tesla has been one of those halo stocks that just seems to lead a charmed life in this market. VIPs, this is a pocket pivot here. If you bought it anywhere around the pocket pivot, it's zooming to the upside. It's just on fire, but it's pretty extended at this point. If I owned it, I might look at taking some profits, giving the extension in the pattern. It's way up there in this market. It's a thin stock, trades about 600, I believe, 700,000 shares a day. Let's check this actually. What's it? Looks like about 668,000. Let's make an even 670 on average. And they come out with earnings on August 13th. So it's pretty extended. If you own it, figure out what you want to do with it. Maybe you hold it and let it see if it builds a little flag up here. But that's a nice breakout. It's a very narrow double bottom, but I've seen this type of pattern work. You come down 2 weeks here and bounce and then break down, undercut, and then boom, you're off and running again. So you could also look at this as a shakeout plus, say, 2 or 3. So from this low is 27.10. Once you get above 30.10 here, notice the pocket pivot roughly coincides with that, and the stock runs higher. So any potential shorts you're watching? Well, I went over the building stocks, which I think all look pretty grim, and that's one area that's definitely on my short sale list. One I should talk about is ARM Holdings. This is sort of a classic head and shoulders pattern. You came out with earnings yesterday, had a big reversal, broke down a little more. You're bouncing into the 200-day moving average. Could be shortable in here into the 200-day using the 39.77 level on the 200-day moving average as your stop. So that's potentially a decent short sale target. And the pattern definitely has the that look, that optimal sort of breakdown kind of look, and we'll just have to see what happens here. But I think right now that's potential short using the 200-day moving average as your near stop, and that is around. Let's see, the high today was 39.83. So you're in the zone here. Good little more than 1% higher from where it's trading at right now at 39.42. But that is one I'm watching for. What's a signal for all in on Coors? I don't know. I'm not all in on Coors myself. I guess, a breakout. They're going to announce earnings in the middle of August, so that's a ways away, and not clear to me, what's going on here. You did have a sharp breakdown through the 50-day. It held the 50-day. That was last week. Let's see. I'm listening to somebody for raising the price target on Facebook to 43 from 37 at Deutsche Bank. So there you go. I hope you're all over it. Let's see. Let's take a look at Facebook on an intraday basis. Let's look at a Here you go. Let's take a look at that. Right now you've got a 620 cross right now, so you're picking up a little buy signal here. Could have got in a little bit early on that, but this thing looks like it may want to turn back to the upside. So let me take a look at something here.
TRIP.
Give me 1 second, everybody. Okay, let's see. Yeah, that's actually acting okay here. So that may turn and head back to the highs, so keep an eye on that one. I even think if you wanted to buy a little bit of it here, that would be a possibility. So even though, I'm not, I should point out a couple of things. We've seen other stocks coming up off the lows of their bases and gapping up. This could be an exceptional case where this actually does end up working. So I wouldn't necessarily be counting it out just yet. I know Dr. K is talking about it having to have doubled, but I'm not so sure that that's the case. This could be something exceptional, and big money having to come into the market may decide that they want to own the stock here. So I think that with this, and if you're using 620, you can keep your risk to a minimum here, and I think you might be okay. That's just my thinking here. Anyways, I'll be keeping an eye on this guy. Whoops, what happened there? And yes, I did just buy a little bit of the stock. That's what I was doing. Oh, great. That's my... Let me get off of AIM here. That's our prime broker over at JP Morgan, bugging me. Figures. Hey Billy, you want to see what Richie wants and tell him to stop bugging me in the middle of the webinar? Okay. ACT came out with earnings, I guess, and let's take a look here. They beat by a whole penny. This stock, I mean, it's forming a base. It's supposedly going to be a much stronger stock. They're buying Warner Chilcott. You're getting a little bit of a pocket pivot move here, but you already had one here. So it looks okay. I'm just not so sure it's got that much juice in it, but we'll see what happens. Is it dumb to apply pocket pivot maneuvers to a thin stock like Trove? Well, JT, I don't see why you couldn't apply a pocket pivot buy point to a stock like this. It looks, looks like it's trying to come out of a base. It's a real thin stock. I think, though, the one thing that I have an issue with is the fact that it is a thinner, smaller name, and it's trading under 10. So my experience is that most institutions will not touch a stock unless it is trading at least $10. So I prefer to set that as my threshold for share price on stocks, and so that would be my only issue with it. But why not? I mean, this could be a viable gap up right here if you caught it early in the day, and you're up pretty decently by now. So not really a problem. Go through some more questions here. Everybody hears me okay, I'm assuming. The solar stocks I'm not, I'm watching these things trade, and they're starting to bother me. This one violated the 50-day First Solar yesterday. And it's possible this could turn into a late-stage failed little cup with handle. I remember SunPower back in 2007, I think it was, late in the year, made a weird little cup with handle, and it just failed and blew apart. So I don't really like this. I think if you had a pocket pivot move here, You should have held this, and the fact that you violated the 50-day moving average makes me extremely cautionary on the stock. It's trying to rally right now, but you know, I'm a little skeptical of this right now. I don't really like the action. SunPower is the leader. Oops, let's get that right. And it's holding up okay. It's had a big move already, and waiting going into earnings, and we'll just see what happens then when that comes out. But let's say if you bought this pocket pivot here, then you're up pretty good on the position, you know, a good 20%. So you could theoretically just sell it and take your profit. In this market, a bird in the hand has been worth a lot more than one in the bush. So, you know, my thinking is I'm not shy about taking profits when I have stocks that are going up 15, 20%. And those of you who have been in the chat room know that that's the case, and I've been operating that way. If somebody says, if Tesla broke out on earnings, would you buy it? It would depend on the nature of the breakout. So I couldn't say with 100% certainty. Gilead, I think they're coming out with earnings today as well. It's been acting okay. It's straight up off the bottom, and it's way up there. But I'm not going to buy it up here, and I'm not going to buy it going into earnings. Let's take a look at this. Earnings are coming out today, along with Celgene. So you're going to see Celgene come out with earnings as well. Cabela. I've been talking about this one in the chat room. Earnings came out, but not much of a move. I don't. This isn't really doing anything for me, at least. It's pulled back. It's violated the 50-day. You notice it's trying to hold a 65-day exponential, but not really going anywhere. And you know, I'm not. I would have expected to see a better move here, so not really that thrilling. And I don't see it as a buy opportunity. Somebody asks, on a shakeout plus 3, are you adding 3 points to the first or the second low? You're adding it to the first low, and you know, you sort of have to use judgment on this. I've seen these things work, you know, shakeout plus 2, shakeout plus 3. Sometimes if you're a $100 stock, you know, a shakeout plus 8 or 9 or 10. But a better way to operate is to look for those bottom fishing pocket pivots. Generally, those will confirm a typical or a simultaneous shakeout plus 3 move in a stock. And so I think that's something to see if it happens in tandem with a shakeout plus 3 type of move. So, but that was Livermore's old rule that you know, shakeout plus 3. But I think that was for stocks around $30. I think as you get higher, you have to look at it more in terms of a percentage move, say 10% or more. Getting back to the solars, though, Solar City, another one. You know, it's closed right at the 50-day and pulling back. And so I don't know what happens on these, but my thinking is, let's say that they come out with earnings and you see a gap up, maybe that's viable. So, but my thinking here is if you had the pocket pivot, there's a bottom fishing pocket pivot down here. I think it was right here. And if you're in there, you know, then you're doing okay. But again, as you run out, you have to keep an eye on upside resistance on these. So as you ran up towards the 45 area, where you can kind of draw a line below these lows and see that there is some upside resistance there, then you might consider taking profit. I had some of this, and once it started to break down here on volume, I just backed away from it and didn't mess with it, and I haven't been in it since. So I'm a little bit skeptical of this right now. What I was looking for and what I was hoping to see was more of a thrust back to the 50 area going into earnings. And so since you're not seeing this going into earnings, then my thinking is I'm not going to sit around in the stock now. I'll wait until they come out with earnings and see what happens. Somebody's asking about Lulu as a short. That looking like a short, but you know, it's going to take the market to roll over. Maybe it gets a little higher. These things can go a lot higher than you think. You know, maybe it gets to the bottom of the gap here, which might coincide with the 50-day, which is now crossing below the 200-day, or just about to, and the 200-day. So you know, maybe it gets up to there, be shortable. It could stop at the 65-day exponential, which is the black moving average that I use. And that might be upside resistance. So I suppose you could look at it that way, and maybe if you wanted to short it. But it's going to depend on what the market's seeing. You can see the market's kind of catching some traction here and trying to hold up. So, but I do think there's a lot of There's distribution in the Nasdaq, and it's looking a little bit funky. But you know, this has been a funky market. So, more questions here. Would you use the bounce in TYL to trim your position? What's TYL? Tyler Technologies. Well, I don't know. I wouldn't be in it, but you could see the bounce could be seen as a sort of a pocket pivot bounce off the 50-day moving average. I don't know much about this stock. Stock's way up there, but it's holding. But I don't know necessarily if I get scared out. If it was able to hold near the peak of the day, then I think you're looking pretty good on that one. So what is it? Oh, it's a thin little stock. Trades 161,000 shares a day. So, you know, not the sort of thing I would be into myself, but let me take a look at some of the fundamentals here. They came out with earnings, 24% increase. You know, not a huge huge mover here. Can you comment on the Chanos shorts, CAT, and STX? Well, if you guys were in the chat room, I think it was last week, early in the week, and I was talking about CAT as a short up around the 200-day moving average, and it did break down. It got some help from Chanos here, so I think the pattern looks weak. But you know, you have come down for a long time, and the stock's been weak for a long time. I don't know if that means it's going to blow to pieces here, but the the global economy is weak. I think there's confirmation of that. We've talked about those before. But in the chat room, I was talking about it as a short back then, before Chanos came out and made his comments. So again, you got to be in the chat room. So I also want to just make a comment that you guys on the chat room keep the language clean. I noticed some people got carried away yesterday, and there was a lot of what I would term sort of edgy language and using references to crude references to genitalia and whatnot. You know, please grow up. That's all I have to say. Let's keep it clean and not delve into that sort of stuff there. But I think if you're not on the chat room, you should be in the chat room. I try to go on at least once a day and show some of the ideas I'm looking at in real time. And at that time, CAT was something I was looking at. Somebody's talking about Chanos is also short STX. Well, STX has just been up there, and I guess it got hit maybe on his comments, and I couldn't say that I'd short it here because I don't really see where you have a late-stage failed base. This is the last breakout, and so it hasn't failed yet. It's holding above the 50-day. So I would never short a stock just because some guy goes on TV and says he's shorting these stocks, and then of course the fact that he's able to go on TV and tell everyone about it is what helps send this thing lower. So you know, I don't really have that luxury doing that, and I don't think any of you do either. Somebody says VIPS seems to have triggered the 8-week rule after going up 20% in less than 3 weeks. Let's see. Let me take a look at this on the weekly. Well, it's, yeah, from this is the breakout point, and the breakout point is 33.99. Let's make it an even 34, and you're at 43. So you're up quite a bit. Not quite, you know, about 25-30%. So if it triggers a 8-week rule, I mean, you can hold it on that basis, but it's not something that I operate on myself. So I'm noticing Facebook going higher, so I don't know how many of you should join me on that trade. BCI, some of the oils somebody wants to talk about. BCI, I think, comes out with earnings soon. Let's check. By the way, if you guys want to know the exact date of earnings for stocks, you can go onto briefing.com and they have it. They come out on August 13th, so that's not anytime soon. But one of the things I don't like about this is it's a double bottom, but the second low does not undercut the first low, which is what an optimal double bottom should do. And it hasn't done that, so you know that's not what I want to see here. And it could fail. And I remember buying eBay in 2003 when it formed a similar pattern like this, an improper double bottom. It broke out and then failed, and then it built a proper double bottom where the second low undercuts the first low. And I actually talked about that in the Gilmore Report yesterday, for those of you who subscribe to that. And I think that's what you better watch out for. Although I have liked the stock, it never actually issued a pocket pivot anywhere along these lows. So, you know, it did drift back up. So for me, that was a little bit problematic. And I don't think I'd want to. If I bought it down in here and it's up here, I might sell it going into earnings and not mess with it. So interesting that we're seeing the market turning here and turning positive. You know, I think we live in an ugly duckling market, and some of you on the chat room know that I've just made up this pattern called the ugly duckling pattern. And it's like when something looks really ugly, or you start to see distribution days pile up in the indexes, the thing will just find its feet and turn around and go higher, you know. And I think that's one of the funny things about this market is that ugly duckling formations, in other words, stocks that just look like garbage, and normally you would think that, oh, this pattern is ugly and this stock is topped. They work. So somebody says, are you looking at any roundabouts? I don't see any right now. You know, Silica Holdings is one of them, and you get the pocket pivots. It's rounding out its base. Most of these have moved up to highs, so I'm not looking at any right now. If I do have any and I see them breaking out, and there's pocket pivots, we'll put out a pocket pivot report. So Celgene's already out. Oh, they came out already. Sorry about that, you guys. Boy, I'm on top of things, aren't they? You know, I was looking around. I don't know, maybe it wasn't on there this morning. Some of you know that I'm a little bit under the weather right now, dealing with a little health condition that I'm going to have to get fixed. May need some minor surgery, possibly next week. Dr. K will be back by then. But they came out, I guess, today. You're right. And it's up a little bit. So, you know, nothing spectacular. Again, it already had a viable gap up, so that's probably already baked into the cake. I'm just watching Facebook trade, and it looks to me like it wants to move higher now. You know, let's go back to our 620 chart. We were just looking at it a little while ago. And you guys heard me put in an order. I got filled like 33.44, I think it was. And you can see that this is sustaining, and it's starting to move to the. I think it might head back to the highs. So I think it's a decent trade if you got in. What I liked here is you have the 620 move, okay, and so this is your initial buy signal, and it moves up, and then it goes tight sideways for 3 5-minute bars. And I like to see that when you see a move up through the where the 6 period is moving up through the blue 20 period. Remember, these are MA20 simple, MA6 exponential. So these are 6 periods. Now, this 780, that's where the 50-day moving average is on the 5-minute chart. So just as a point of reference, you notice it's nowhere on this chart because it's probably too far away. But you know, when I see that, I tend to like that, and it's starting to confirm. I'm going to bet you that if the market holds up, this guy is heading for the highs of the day, which may be close to 35. So that's just my call right now. Jazz, the stock you love to hate, or I hate to love it. I don't know. It's what looks good in that 620 chart, but Gap. Let's see. No, that's Facebook. Oh, Jazz is just hanging in there. When do they come out with earnings? Did they already come out? Let's see. There's a Cantor Fitzgerald out there talking about stocks the other day, but nothing today. Earnings come out on August 6th. But you know, it's hanging in there, and it tends to surprise me by continuing to move higher. Somebody suggests maybe if you're doing a shakeout plus 3, you could use the ATR to normalize it to the volatility of the stock rather than 2 or 3 points. I agree. You have to use some judgment if you want to get really scientific about it. You could do some testing with you know, average true range and see what works well. So maybe it's a certain percentage of the stock's average true range. So, you know, shakeout plus the 40-day average true range, something like that, would be a buy point. But I think there are a lot of ways to skin a cat. And the shakeout plus 3 move is a Livermore rule, and a lot of Livermore's rules are kind of you know, he used his gut feeling. He read the tape. He could sense when things were moving. That's the way I'd like to operate. So I'm not really rigid about how many points I require. You know, once it hits 3 points exactly, I'm buying it at 3 points and 1 cent higher. Sometimes it might be a little sooner. It might be a little later. Gil, do you use options? No, I don't. So when I run out of money and I need more money to trade and I have a big winning stock, maybe I would. I did that in 1995 with C-Cube Microsystems. I've talked. You guys can actually read about that in the first book that Dr. K and I wrote. United Rentals, a very V-shaped pattern here. So you have this pocket pivot type move, but it's pretty volatile and kind of a V-shaped base here. So I think it's a little bit premature here. I'm not really into it. If you are, then and you're making money on it, more power to you. Gentherm, I think this is a yeah. I assume anything that's trading like this is a biotech, but I'm probably wrong. Gentherm is an auto truck original equipment, just like that iPar, I think it was. Is that right? We were looking at the other day. No, that's a cosmetic company, but THRM, Gentherm, coming out with earnings, I guess, at the beginning of August, but it's acting okay. I think you get a pocket pivot right here yesterday, so that's fine. Looks like, let's see, 1, 2, 3, 4, 5. Yeah, it looks like you get another pocket pivot here. But, stock trades just under 300,000 shares a day, so it's a little bit on the thin side, so not optimal liquidity that I would like to see in a name. So, but it's working, and if you're on it, you're in here somewhere lower, then you're getting confirming signals here, and a number of pocket pivots. I think there's one here, there's one here, there's one here, coming off the 10-day. There's one here coming off the 10-day. So it shows some pretty good strength here. DPZ. Domino's Pizza. I guess pizza's had its run, and but the stock's holding the 50-day moving average. I guess the 50-day line is your ultimate selling guide for the stock. So violation of the 50-day, it closed below yesterday's, not yesterday's, but let's see, today's Thursday, Tuesday's close. It closed below there. Would be a violation, and maybe you finally sell it there because it has held the 50-day all the way up if you look at it. You did close below here, but you never went below the intraday low of this day, and so you held it pretty well. So I think ultimately, if you're looking for some guidance in terms of what to use as a selling guide, I think that the 50-day moving average would suffice. Somebody asked, how do you determine to hold into earnings? You want to have a certain percentage cushion, or do you ever hedge with options? My approach basically centers around doing nothing and staying out of the stock and seeing if some kind of viable gap up occurs, or alternatively, if I think that there's a good chance of a surprise, I'll take a 10% position. I wish I had done that with Facebook yesterday. I thought about it, but didn't do it. So that's just how I approach it. I don't hedge with options. Hedging to me is like decide whether you want to be long or short. Hedging to me doesn't optimize the situation. If you're worried about losing money, then just size your position and do the math to figure out what a worst case scenario is going to cause in terms of damage to your portfolio. So if you take a 10% position and the thing drops 20% after a bad earnings announcement, well, then you're going to lose 2%. And if you can handle that, then that's what you work with. If you can, if that's not going to bother you. So if it's a problem, then lower your position size. Based on that particular equation, which isn't really anything complicated. Wet F. This had a pocket pivot the other day here. I talked to Dr. K about it. Didn't really like the stock. It's a little bit of a thin stock. This group, though, you had Blackstone Group had a viable gap up here, and also another one I noticed, BlackRock, had a pocket pivot right here, and these have moved up a little bit, so they're acting okay. Nothing really, bad about it. And so Wet F, these guys run ETFs, I believe, and so, they're. I'm not sure they have any really exciting products, but these things have had some good upside moves. It's a cheaper, thinner stock, and so you have to take that into account. The website for earnings is just go to NASDAQ.com. Let me. I'm going to show you the site once again. short interest. So basically what you're going to do is you're going to go to NASDAQ.com.
FFIV.
And you're going to, voice, that's actually Siri's sister. And I don't know if you guys are familiar with her. She works for Briefing.com, so whenever a headline comes out on a stock that is on my watch list, you'll hear her voice. But, you know, for those of you who ask about that female voice, that is Siri's sister, believe it or not. Anyways, short interest, you go here. So you go to Quotes and Research, Short Interest. And I have a little list here of stocks that I look at and go now, let's see. So here's Tesla. You see 18.4 million shares as of 7/15. I was curious about 3D, and let's pull that one up. Uh-oh, what happened? I guess I just erased it. How do I do that? Talent, I guess. Let's look at 3D Systems. Notice 3D Systems right now has almost the highest amount of short interest it has ever had. The highest amount, I believe, is 27.3 million shares back in April of this year. If you guys recall, that's when the stock, let me move this out of the way, that's when the stock had its big move to the upside following earnings. That was in April here. So all that short interest had to plow into the stock. I think it's worth watching because it is holding the 10-day moving average here, and it's a little bit tight in here, so it looks like it might want to move on earnings. And I've been toying along with InventSense. I've been toying with the idea of holding a 10% position long in 3D going into earnings. But you can see how my decision to do so might be based on the fact there's a lot of short interest in the stock. So, you know, I look at some others. You'd be surprised. Solar City, you think, would have a lot of short interest, but it doesn't. So it's only 4.6 million shares, which is 1.83 days to cover. But that's where you go look at short interest, and you can keep a list on it of names that you're watching. And I think it's a good idea to keep this site, you know, at the ready and be aware of short interest in your stock. I notice if you have a high short interest in a stock, you get a buyable gap up. The stocks you usually get a little juice behind them. So getting towards the end of the hour here. Pandora Media, it's just holding along the 10-day. I don't see any buy points here. There was a gap up here. I don't know if that would have qualified as a buyable gap. It's a squirrely stock, and I think it's relatively thin. It trades, well, 7.1 million shares on an 18 million share or $18 stock is not that bad. So. Ulta short, not really yet. It's trying to come down through the 50-day. This stock is squirrely, but I would keep an eye on it. It is failing here, but I don't know if it's going to blow apart. It may not. If the market remains in an uptrend, then your odds of making money on the short side severely diminish. So somebody asked a lobotomy, I guess asking about having surgery. Bad joke. Let's see. Do you see the refiners making a rounding bottom? Well, they're in downtrends right now. I need to see them round out the lows a little more and show some accumulation. You know, maybe more upside weeks, closing in the peak of the range, and then some sort of a pocket pivot as they come around. So I don't see these as doing that. Let's look at another one. Tesoro. Another one. This might be a little closer, but again, they're living below the 50-day moving average, so you'd want to see a pocket pivot coming up through the top. So, what is your stop on FB? I have no stop. It's going to the moon. Soda. I don't like Soda. Stock violated the 50-day moving average. Would have been out of it here if I was in it. Could have saved yourself some trouble here, but I'm not a buyer of the stock. I don't see anything positive here. ZSL. What is ZSL? Short silver. I don't really see any opportunities here. What I'm noticing on silver and gold is you're making higher highs, higher lows, so you're in an uptrend channel. They're trying to move around. I think there's some confirmation of QE in these things, and I think you need to probably get off the idea of being able to short these things. I really don't think that you're going to see a lot more downside from here. A lot of people talk about them going to 1,000 on gold and silver much lower, but I think you could be getting close to a bottom, so I'd be very, very careful with these stocks, or these ETFs rather. EFT and Icons, Pocket Pivot. Well, they're Pocket Pivots, so you know they're up there. But this is a continuation Pocket Pivot. It's extended, so it's not viable. Icon PLC, I saw that one yesterday. It was off the 50-day moving average, so they came out with earnings yesterday and have gone higher since then. So, but yeah, those were Pocket Pivots. NSM had this sort of Pocket Pivot here. Let's see, is right here. It's a little extended from the 50-day, but that's working, you know, and it's also sort of a double bottom breakout. But they're coming out with earnings at the beginning of August, and we'll just have to see how this acts. But so far, it's holding that, and it looks okay for now. It's a little bit jagged, but you know that's kind of how this thing trades. You got these three bases here, so I don't know. It's just a third stage base, and it's going to fail. I'm not sure. But if you bought the Pocket Pivot, you're up in it. You got to decide what you're going to do going into earnings. OCN is another one where you have this little cup with handle type thing, but no real buy points in the pattern. I think it's just a matter of waiting for them into earnings. Last few questions. GNC, what do you think of it? It's not a stock that I own. It's breaking out. Looks like a buyable gap up, so that's what you have. So if you want to buy the stock and play this, then you would buy it using the 48.53 low. It's a little extended, so I don't think I'd buy it up here. ACAD, I don't really like ACAD's action. I sell it whenever this thing gets moving. I sell into the move, and that's been the smart thing to do. You have a breakout Pocket Pivot here, and it doesn't go anywhere. So you know maybe it's just going to base in here and continue basing, which it's doing. But to me, it was a sell up around 20, which is how I handled it. So. Somebody says, are you still leaning to buy on the fades rather than the gap ups? It depends. You know, I don't operate on one uniform rule. I look at stocks individually and try to make a judgment on that. So if I see something, you know, I'm assuming you mean pullbacks on the fades. It depends on the stock. So you know, I think if you're looking at Facebook, jumping in on the gap up after the pullback, and then you get a 620 turn, that's a good method to use. What site do you use for earnings coming out? You go to briefing.com. VRX. Last name I'm going to cover, you guys, because it's 10:02. I'm getting a little tired as well. VRX acts well. I think you're just waiting for earnings to come out, and you'll see what happens. I suggested it as a buy along the 10-day moving average. You had these two Pocket Pivots, and I think a couple, 3 weeks ago during a webinar I talked about it's holding tight along the 10-day. After these two Pocket Pivots, and I think that makes it viable as just to buy it right there based on these two Pocket Pivots. And the fact that this pullback here was caused by the market, and that was when the market bottomed. And so I think on that basis, it could have been bought there. It's moved up, so if you're in it there, you can probably sift through earnings because you have a little bit of a cushion there, maybe 5-6%, decide how much of it you want to hold. So. Somebody says, good luck with your surgery, hope all goes well. It hasn't been scheduled yet, kind of getting there. We'll see how that works out. But it, you know, it should be okay. It doesn't keep me from trading. I was pointing out on the chat room on Tuesday, I had to go for a test, and I'm sitting there with all this stuff hooked up to me and hooked into me, and I'm in the middle of trading, and the nurses got a kick out of that, and said they had never seen anybody do that before. And but you know. That's life, c'est la vie, deal with it. And as my parents have assured me, growing old is not for wimps, and I will turn 54 at the end of August. So, but I appreciate all the good thoughts from everybody, and you'll see me on the chat room. So, last one I'm going to cover is Away. So somebody said, did you cover on Away? I never shorted the stock, so I may have made some joking comment on the chat room, but... How do you mobile trade? I can use my laptop, I can use my iPhone, I can use my iPad, and when I'm using my iPad or my laptop, I have a MiFi unit, a Verizon MiFi unit that works very well, and in fact, it's in most places that I'm at, gets better internet connection, higher speed than my home internet. I mean, I picked up 17 megs before. Anyways, yeah, I talked about Away already. I mean, it might be pushing on a Pocket Pivot today, but it's a volatile stock. So, anyways, that's all I've got, you guys. Dr. K will be back on Saturday, so he'll be with me next time. And I'll catch you guys on the chat room. So take care. Thanks for showing up, and we'll talk to you later.